good morning. Dornbusch download number 91, Andrew Dan.
How you going, Andrew?
Mate, I'm all pumped up, nowhere to go. The story of my life.
Come on, you did get a hog's breath last night.
I went to Hog's Breath last night, and more importantly, State of Origin, and we haven't actually got one of the balloons. Actually, you've got one there. Would you mind just passing us the balloon that Susie in the office kindly put these everywhere? Thanks for nothing, Suze. So what's your tip for tonight, Maroons, by how many?
Oh, it'll be tight, I reckon, maybe 4.
I think I said 8 from memory. So, yeah, but there's a few blue baggers around here. Good luck to you.
Yes.
Anyway, let's talk about markets. Off 64 at the moment. We're filming this at about 10 past 11. GDP numbers on Wednesday. GDP numbers come out today. That export number that came out yesterday sort of supporting maybe a stronger than expected GDP number.
Yeah, looking at that, you know, the economists reckon if it comes in at about that 1.1, it'll be our strongest growth period in 2.5 years. So
it's hard to pick, and yet the Reserve Bank keeps cutting interest rates and tells
us... Yeah, it's all doom and gloom. You know,
so
what's going on.
Makes no sense. I think that's one of the reasons we're selling off today. So we're, as I said, down 60 odd at the moment. Any other reasons you think we're selling off today?
I think we're just at the top of that range, Andrew, you know, and looking at that chart for the ASX 200, there's a bit of support around the 5200 area, so maybe 5210, but if it busts through there, you know, the bottom of the range is around 4800, so that we could well come back there.
And, you know, it's interesting you should say that because, you know, we've been lamenting the last 7 weeks. Why is there any strength? Like, there is no real reason there's strength apart from...
We're too used to selling May and go away, don't we?
And, well, that's an interesting point. You know, we're up 3% for May. Historically, May's been a dreadful month. Yep. June, out of the last 7 Junes, 5 of them have been negative. So I think a lot of people are going, 1 January, we're out.
Yep.
And fund managers who have had a pretty good run over the last quarter trying to lock in gains coming into 30 June and trying to make their annualised performance look pretty good.
And I think that's one of the things, Andrew. If you look at those charts, you know, on the banks, particularly how they've been running up over the last couple of weeks, but the volume's been coming off. So maybe it's been the, you know, the fundies in there selling.
And you're spot on. Buying. You know, when we're looking at shares, we look at 2 things. Obviously, fundamentals, you know,
the company,
how much money they're making, what's the management like, all that stuff. But, you know, like your area of expertise in particular is around those charts. And what you're looking for, and correct me if I'm wrong, you're looking not only at the price action, you know, is the price going up and down, but more importantly, the volume. Because if you haven't got that volume, if you haven't got that volume support there, it's just falling away.
Yep.
So interesting to see increasing prices, falling volume, not a good outcome. One of the things that has crossed our desk over the last couple of days is those NAB notes. Notes 2. So do you want to give a quick 10-second
Similar to what we spoke about with Westpac, really, isn't it? Margin, though, 4.95, so up half a percent.
5 basis points.
5 basis points.
So,
half of 0.1%.
So a little bit more.
A little bit more.
But a slightly longer duration. Instead of 5.5 years, it's 6 years. So, you know, pretty much the demand for Westpac was enormous and we got 2/3 of nothing. Yep. So I would anticipate that, you know, it's going to be exactly the same again relating to sort of what's going on with those National Bank shares as John Goulson tries to sneak past. With the maroon shirt, though, on, so that's good on you, John. So certainly if you're interested in some of those NABs, I would strongly encourage you to get in contact with us straight away because if it's anything like the Westpacs, they're going to go like that. And
that Mercantile investment company, they're putting out that note. You know, that's it does look interesting. I mean, it's an unsecured note.
MVT is the code
for the company. Yeah. Paying 8%.
So Sir Ron Briley Investment Company, he's been involved for about 4 years. He's returned about 23% per annum since he's been involved with it.
Guinness Peat.
Yeah, very switched on bloke. Gary Weiss, the guy with the crazy hair, he's in there too. And
Gabriel. Going to say Donald Trump.
And Gabriel, whose surname I'm going to butcher, who's involved with Sandon, he's also on the board as well. So some very switched on guys. And as you're saying, they're issuing a note. Be paying 8%, 5-year duration. So we haven't got a lot of info on that at the moment, but again, maybe if you want to have a chat to us about that. Yeah. That one's probably a bit more for, if you're from a risk point of view, probably a little bit more risk of a risk taker, whereas the NAB notes, it's pretty
The biggest risk with those notes, is, really in my mind, is if the banks stop paying a dividend, they can't pay the interest on the notes.
Correct. So they're not a listed term deposit. We shouldn't confuse ourselves for a moment that that's the case. You are buying the debt of National Bank.
And we've seen that downside volatility with the previous notes being issued, Andrew, haven't we? Because they've got to get their yield up to what's being offered now, which means their share price
Correct.
comes down.
And when that margin was, say, 3%, everyone thought a 3% margin was sensational.
And it was great. Yeah.
It was great, but now 4.9 is the market, and anyone who's got a 3% margin, it's a bit less. Other share we've been looking at, well, I've been looking at, and I've been saying everyone in here buy this one, is one called Class Super, CL1 is the code, and they're basically assist accountants, love their cotton socks.
Where would we be without them?
Well,
especially this time of year.
I'd be homeless without one. Hello to Mrs. W. So basically, they provide cloud software to accountants in the provision of self-managed super fund compliance. So there's about 500,000 self-managed super funds out there, and they've got about 100,000 of those SMSFs as clients. Probably the key thing I like about it is that there's very few shares about. So the founder and his team still own a number of shares. They have a 99% client retention rate, and they're growing their profits pretty strongly. Downside, pretty highly priced from a PE point of view, and it's only about a 1% yield. So again, it's more of one of those more growth-focused ones. But if you're looking for businesses that are sticky, compliance-driven, and unfortunately that's sort of the way the world is going.
Very much so.
Certainly, and it's chaired by Barry Lambert, who's got a good track record relating to what he did with Count before they got bought out by CommBank. So certainly one you might want to have a bit of a look at. Otherwise, Dan, anything from you?
All good.
Go the Maroons. Till next week.